Hey everybody, it's Will at VIP Mortgage. It's time for a local lender update. We did see a decent price improvement in the bond market on Friday, which reflects a little bit on mortgage rates when that happens. And that puts us at the best spot we've been in our new trading range, which is what I talked about last week. We've established a new trading range, and now we're seeing an improvement within that range, which positions us for a possibility of clicking into some interest rates we haven't seen yet as far as improvements go. A lot of that was based on the Fed comments after their meeting. I mentioned last week that I expected them to be cautious or maybe even a little pessimistic, and that could cause some increase in rates, but the opposite is what happened. The big takeaway was the labor market. They are tracking unemployment. They do see that there's a major issue as far as unemployment goes developing, and we could really see unemployment tick upward in the fourth quarter, maybe even into 2026. And that's part of what they're supposed to be responsible for, is making sure we maintain full employment. People are staying on unemployment benefits longer. We keep seeing job numbers revised downward dramatically after we get the headline number, and they're paying attention to that. The other thing they talked about was inflation. They finally admitted that if we see a price increase based on the tariffs, that's going to be a one-time increase. Right. The last time we saw inflation get out of control, it was runaway inflation. It was inflation month after month after month at very high rates. If tariffs cause some inflation, it should be a price adjustment at the store to account for the tariff rates, and that's it. We haven't seen the inflation trickle down to the consumer level, but last month we did see it at the wholesale level. So we could see some more inflation coming up, but the Fed is basically signaling they're not really worried about that. So the likelihood of a September rate cut has gone way up. It's almost as close as you can get to a sure thing right now. And then of course the conversation will be, how many more times do they need to cut? What's appropriate based on conditions on the ground? And I think the market's getting confident that we're moving into a less restrictive area where the Fed's policy is not going to be restrictive as far as money flow goes. And overall, that will help rates more than a cut. If there's anything we can do for you, give us a call, 719-232-7553.